What if I told you that money is the thing you earn, save, spend, chase, and rely on? No longer serves the purpose you think it does? What if I told you that in 2025, the world's central banks quietly changed the very identity of money without announcing a revolution, without rewriting laws, without even asking your permission? Because that's exactly what happened. Today, we're going to uncover the silent transformation reshaping your wealth, your future, and the global economy. How central banks quietly rewrote money's purpose in the 2025 cycle. For years, central banks claimed their job was simple: keep inflation stable, keep the financial system running, and step back. But as we entered the 2025 cycle, something began to change. Their power expanded, their tools evolved, and their goals shifted from managing money to reshaping behavior. The first sign appeared when inflation refused to follow traditional rules. Rates went up, but prices didn't fall fast enough. Consumers kept spending, businesses kept borrowing, and central banks realized something unsettling. The old playbook no longer worked. So quietly, they wrote a new one. The 2025 strategy wasn't about printing more money. It wasn't even about raising interest rates. It was about rewriting the role of money itself. Instead of being a passive medium of exchange, money was redesigned to become an active instrument of influence. Central banks shifted from responding to crises to pre-shaping outcomes. They moved from stabilizing economies to steering them. Every policy decision became less about numbers and more about nudging behaviors. Money became messaging. Interest rates became signals. Liquidity became leverage, and the markets followed. As global debt reached historic highs, central banks realized they were no longer just referees. They had become the players. The world depended on their every move. Markets began pricing decisions before they were announced. Banks reacted to hints rather than policies. Investors executed trades based on tone, vocabulary, even facial expressions in press conferences. The invisible hand wasn't the free market anymore. It was them. And when 2025 began with unexpected volatility, from currency swings to tech sector failures, the invisible hand tightened its grip. Liquidity injections, strategic pauses, selective tightening, and sudden signals were used like chess moves, not to calm panic, but to mold expectations. Money became psychological. Behind the scenes, digital finance accelerated this transformation. Central bank digital frameworks didn't need to be fully launched to change the system. They only needed to exist. The possibility of programmable money, traceable flows, instant policy transmission, and real-time monitoring became enough to enhance their influence. The purpose of money shifted from exchange to tracking, from saving to signaling, from value to control. People didn't notice, but institutions did. Lending patterns changed, market makers updated algorithms, corporations began aligning strategies not with demand, but with policy forecasts. The financial world rewired itself around central banks, willingly, silently, and permanently. By mid-2025, the global economy wasn't reacting to reality anymore. It was reacting to forecasts. Predictions became more powerful than events. Behavior responded to what central banks might do, not what they said. Inflation didn't fall because prices dropped, it fell because consumers changed their choices. Spending slowed not because wallets were empty, but because expectations tightened. Investment shifted not because risks grew, but because signals hinted. Money became a psychological ecosystem, shaped by perception, direction, and narrative. So how did central banks quietly rewrite the purpose of money? By recognizing that the true battlefield wasn't the economy, but the mind. By leveraging communication instead of cash. By shaping expectations instead of numbers. By controlling liquidity without printing a single bill. By becoming architects of behavior rather than guardians of stability. And most people never saw it happen. Money still buys things. It still pays bills. It still fills bank accounts. But in 2025, its deeper purpose changed. It became a tool not for the people, but for those who manage the system. The question now is simple. In the next cycle, will money serve you, or will you serve the system it was rewritten for?